Good morning, everyone, and welcome to the European crossover webinar. And we did have some economic data that came in. And that was Spanish estimated GDP quarter over quarter, 13.5%. Wow. We'd actually started out the morning with French GDP came in at 18.2%. German retail sales came in at minus 2.2%. Then with the UK nationwide housing prices came in at 8/10. They were expecting up 4/10, a little bit stronger. Then French consumer spending came in at negative 5.1%. And then Italian unemployment rate came in at 9.6%. They were expecting 10.1. As I mentioned, we just got Spanish GDP. Not Spanish GDP, but Spanish GDP quarter over quarter. But this is odd. Oh, but that's German GDP flash, which will be at the top of this next hour, along with Italian GDP and Spanish current account balance. At 6 a.m. Eastern, obviously we've got that time change that will flip around after this week. Italian consumer pricing information, price data, and also at 6 a.m. Eastern, Eurozone, HICP flash, and GDP. And as we come into the States, 8:30 Eastern, we'll have personal income and spending, employment wage benefits, Canadian GDP. It's going to be a mover here for the Canadian dollar. Producer prices, shy PMI at 945, and University of Michigan Consumer Sentiment, that'll be a final reading, 81.2. Eurodollar's hung around this level. Remember yesterday I said support at 1658 on that break. We have that little zone between 1658 1651. I think the bottom was 1649, and you can see we're just trading a little bit higher here. But that was the level that I thought they would want to go to if they did break. We covered this on the webinar yesterday. One moment. Remember when we were going over the story and they're referencing the ECB, and the thought was the ECB wasn't going to do anything, but that what's her name would be laying the groundwork for a December rate cut, and that's exactly what happened in her presser. And then we ended up, trying to say two words at one time: breaking and moving lower. And once we did that, then I was looking for an area where they could go to, and that was a 1658. We had this little zone here. One moment. You can see here between 51 and 58. That's the low is 49, and then we've kind of bounced back since then. Cable a touch bit weaker today, and we'll move into the Aussie. Also a touch bit weaker here for the Aussie. With that, we'll look at the indices. Yeah, Karina said about your dollar. Well, look, we talked about it yesterday. I mean, honestly, the moves already happened. These moves, we had the ECB, and I think people were thinking, oh, she didn't take action. We're going to rally. But that's what I kept saying about watch out, for the presser. That's what they said was, and I'm not following. to a point where I'd say, okay, if she says this or says that, they're going to go on and he's going to move it lower, whatever. But that was something new. We had already dropped here from the prior day, and her saying she was started really laying it on thick. Lagarde, I meant to say, started laying it on thick about what was the action. They're going to look at all the tools, this and that. So she's really telling you they're going to knock it. And then she even straight up says, FX rate, they're going to be looking at that too. So I think if this could have pushed any lower, it would have. But the dollar, regardless of situations, the dollar can't rally for not much of anything. Or this thing could have been, much lower. I think the reason it didn't push a whole lot lower is because, once again, if Biden does win the election, we talked about that. It looks like everything's pointing towards that. Well, then we'll probably see a pretty good dollar sell-off. So that was going to provide probably like a little bit of an undertone bid for the euro that wouldn't allow it to fall too much. But once again, like I said, she was telling it to you right there, and it was something brand new. And so they were going to have to go on and, as I mentioned yesterday in the chat, they would have to allow the market to digest what was being said. Digest as far as longs might say, you know what, I'm going to back away. I'm not going to stay long. So how far we go, that's the amount of how the market's going to go in and digest that here. And you can see here, we're off of these lows. I think this is more about, they're thinking if Biden wins, the dollar's going to really fall apart because of the expected stimulus that we would get. So that's why there probably is, you're not seeing that fall through today that I would think. We push a little bit lower. I guess anything's possible, but look, the NASDAQ is at new lows. So if we were going to push lower, we would have pushed lower. So that's what I'm saying. I think we're probably stuck around this area. But anyway, that's enough on that. Once again, if we go back, not go back, but if we go here to the indices, as I mentioned, you look at that, the NASDAQ's at lower lows. So if the dollar wanted to rally, it would rally. It just didn't. Or if the euro wanted to fall even further. And this is really crazy. I was looking for a rally yesterday because of the way Apple, I shared that on the feed, Apple and Amazon and Facebook, and they were coming into earnings. And they pushed up even further than what I thought. But boy, once those earnings came out, look at this. We fell 70. We rallied back 70. Then look, we just started coming apart. And look, then in Asia, you would have thought, okay, maybe they might test this. But look, because it's a Friday, wow, they really came down. And it's just, wow, we've had some pretty good moves in here. I do see here on the 30-minute, they did make it down to 10,040. They're coming off of that. There's a level there in the 30-minute, but the problem is that just like yesterday, and I was hesitant to, I made sure I came in at good levels when I did take the very few shorts that I did, was because I thought this market can get a little bit overdone if it goes on that because of the earnings. The same thing, they're selling off into it. I mean, don't want to be picking this up under any circumstances, regardless. I mean, because you can see how quickly you thought, okay, well, they're falling here. Maybe they'll pick them up. Who knows? What, right here. And then look, we turn around and it just keeps sliding. Situation like that, you're forced to bail out because you're not sure people are going to be liquidated until Friday. So really the safer bet is going to be just to short when those levels go in and come in. Take a look at the S&P. Pretty good slide here also that we've had. And gold, we really haven't done anything here in gold. I always had that, remember that 1842 area, 1827 to 1842. If it gets there down there, I think it'd be interesting, but we'll see what happens. So that being said, we'll just get to the stories and the analysis. And you see, that's why I read these stories, is because I tell people they set the tone for the day, and nothing could be more evident than when we covered the dollar the last story, which encompassed about the euro, and even in the euro, the it couldn't have been any more than 3 sentences they had on the euro, and it said the ECB's later on today. No one expects them to take action, but they do think that Lagarde will lay the groundwork in the presser for a December rate cut. I mean, if you just pay attention to that, he's been set, and that's why I mentioned it in the chat room before. And anyway, but I'm just saying it wasn't any great insight I had. We're just going directly off of what the story was saying. And once again, it's not going to tell you whether to buy or sell something. But what I tell people, I read the stories because it gives us an outlook. It gives us a tone. It kind of sets the tone for the day. Whether it's right or wrong, it sets the tone. You can see, well, okay, that's what they're looking at, and we'll find out. Then you can go on and shape the way you're looking at taking a trade or not taking a trade or exiting a trade. You kind of encompass that information that they share. So anyway, Australia New Zealand dollars suffering sympathy as coronavirus spreads offshore. The Australian New Zealand dollars were heading for a weekly loss on Friday as an unrelenting wave of new COVID cases in Europe and North America darkened the outlook for global growth and commodity prices. The Aussie was pinned at 70.35, having touched a 3-month trough at 70.02 overnight that let it down 1.4% for the week so far and threatening support around 70 cents. Kiwi dollar was faring just a little bit better at 66.28 after hitting a 1-week low at 65.97. It was down 1% on the week. Lockdown across Europe and European Central Bank on Thursday to signal further stimulus, likely in December, though more bond purchases and cheap credit for banks. That is one reason investors are wagering heavily on a rate cut at the bank's November policy meeting next week and a move to buy government debt in 5 to 10-year tenor. And that's referring to the RBA. The market is already well priced for easing by the RBA, said Tappas Strickland, Director of Economics at NAB. Our latest analysis of how large a QE program needs to be suggests that RBA would need to buy at least 143 billion Aussie dollars, which would equate to around 8 billion Aussie a month under an 18-month program. 3-year bond futures held just a short of all-time highs on Friday at 99.83. Dollar stabilizes and euro 4-week low after ECB announcement. The dollar paused its climb on Friday while the euro wallowed near its 4-week low against the greenback after the ECB signaled further monetary policy easing by the end of the year. Overnight, the euro's decline, in addition to U.S. data, helped lift the greenback to a near 4-week high against a basket of currencies. The ECB kept interest rates steady on Thursday, but committed to contain the growing fallout from a second wave of coronavirus infections, saying it would hone its response by its December meeting as it's would likely expected by the market. We agreed, all of us, that it was necessary to take action and therefore to recalibrate our instruments at our next governing council, ECB President Lagarde told a conference. Daisuke Katakama, Chief Market Economist at Mizuho, said that a buildup of expectations for the ECB monetary easing may cause risks such as dollar buying spree of the euro to fall further. It'll be fine if the ECB can exceed market expectations, but now they've made an announcement in advance. There's a risk that the December meeting turns out to be an underwhelming issue, Katakama said. The euro from slightly 1679. Data on Thursday showed the U.S. economy grew at a record pace for third quarter and improving trend in jobless claims. U.S. GDP rebounded to 33.1%. Separately, a report shows 751,000 people in the U.S. filed for state benefits. The dollar index was at 93.89. Still uncertainty surrounding Tuesday's U.S. presidential election and coronavirus fears continue to loom over the market. This part I don't agree with because, as I mentioned, the polls are, and I'm just giving you from a boots on the ground, I told you yesterday, from someone who does follow national politics. I don't follow as closely as I used to, but I am out of prior interest, kind of like a student of presidential elections, in the sense that I've always been in, I've always liked national politics. Uh, I don't follow this closely anymore, but I got a pretty good fit. I got pretty good handle on stuff, and I'll keep watching stuff. I just like news a lot, but I can tell you right now is one of the things that I told you that we talked about that yesterday. Polls from this 2020 to 2016, and they said that, hey, look, the national polls didn't get it wrong. Everybody laughs at the national polls, but they were saying they didn't get it wrong because what's her name, Hillary, did win the popular vote, which she did. But of course, the you don't get elected by the popular vote; you get elected by the electoral college. But where it divvied was in the state polls. They missed it, and didn't they miss where you're seeing that turnaround. And we're actually not seeing it. There's certain states that are saying, oh, things are tightening up a bit, like in Florida. But in other states or other key battleground states, it shows that actually it shows it even widening. And the problem for Trump is in these Midwest states like Iowa, Wisconsin, the coronavirus cases are exploding. So it's even um, kind of like trying to think of the word, but is basically strengthening that idea that, hey, look, he's let it get out of control. And those are key states that he would need. So that's a concern here. And essentially, people are, for the most part, voting it as a referendum on Trump. They also found was, and I'll leave it at this, they looked at the polls for how you disapprove and approve for coronavirus, and they found the in the states those that approve on his handling of the coronavirus is matching almost exactly for what the poll is showing for the support. So with that, it looks like there's just not a chance there for Trump. And I'm still thinking it appears like nobody wants to talk about it, but I guess they're uncertain. But if for some reason um, Biden wins Texas, I was going to say that. That's one thing you want to look for. If you were to see that Biden wins Texas, it's over. You can get long indices that moment. Forget the rest of the nation. They'll be impossible for Trump to win. Then you could get long, and it really would portend a true blue wave. Get long the indices like bananas. But anyway, let's move on to the analysis. But yeah, I've seen that. Nobody really wants to talk about it. I mean, I saw a political commentator on, it was a trio the other evening, but actually it was, what's her name? Her last name is Carpenter. I can't think of her first name. She was actually the political head person for Ted Cruz when he was running for president in 2016. And she's just like a Republican commentator. But what she was talking about the polls, and she was saying, wow, Texas is unbelievable because the amount of early voting. She goes, it's bananas. So the thought is that, I mean, initially there's going to be a lot of a Democratic run, but that you'd see the Republicans catch up. And I think that's why people just don't know. But like I said, if you see Texas go blue or everything's leading that way, and on Tuesday, which we should have the numbers early, they shouldn't be that long. Boy, at that point, the market's going to start getting long indices real fast. You see what I'm saying? Florida, because it's the way it is, it might kind of linger as we go into the evening hours. Trump loses Texas, it's game over. And I'm not even exaggerating. It's game over at that point. That'd be almost like the Republicans winning California. That's how big of a deal that'd be. So it'd be game over. And Texas it's just a lean Republican right now. So, but we've had unbelievable numbers. So if Biden appears, or he would then, appears to end up taking Texas, the indices will respond to that right from the get-go, and you'll just see the rest of the night just rally like bananas. But anyway, enough of that. So here we are with the euro dollar. Let's pull up the bus chart. So the euro dipped on ECB day to a support level of 1651/1658. You can see that there. Resistance on Friday will be 1702 with support at 1643. So you can see I was looking at it for a tight move anyway. And this analysis is done in the Asian session. So if you actually go to basic technical support, you can already have this information. Each one is updated. That is as far as the majors, not the cross rates. Let's go to the cable. As I said, you can see here, the analysis is concise, okay? So I'm not writing a book because we're going from day to day. But like I told you about the ECB yesterday, and I said, if we break this market, I thought it was going to happen in Asia, but it happened yesterday. I go, when it was starting to break, I go, we're going to go down there to 1658. And so all I look at is the market going from levels to levels, and we try and pick those levels where there's the most touches. And that's the way that I go on and look at a market coming in for support. So, as I mentioned, I don't believe everybody has their own way of looking at markets. Another thing is, I don't believe in RSI stochastics. If you look at a market, you can tell that the RSI is going lower. You see what I'm saying? Or if a market has been struggling, like it's up, down, up, down, up, down, and I'm not saying this isn't a good example here, but let's say it's moving higher, but it keeps closing to the lows, then you know that the RSI or whatever is fading, like as if you can see the market. If you look at the market structure, it will tell you what the circumstance is if there's some type of a divergence going on. So I just keep it simple. I'm looking for markets moving from level to level, and I'm giving the levels that we're looking at, in a sense, almost like a day trade type thing, although it's not. So I say, okay, if it breaks here, where's it going to go to potentially? You don't know for sure. And where will I see the most action, like putting up a fight for support and resistance? So that's the way I look at it. I don't go into all this fancy Dan analysis. I mean, I'll look at some some fibs, but basically I just look at the market structure and say, okay, where's it going to go and where's the next level? So anyway, cable dipped down to 28.78. You can see here, it didn't make it all the way down, but you can see the significance of 28.78. Rebounding back above 29. Support on Friday will be 28.57 because I thought, well, what if they take another little dip here with resistance at 29.62? So you can see here, been a quiet morning. So now let's go into the Aussie dollar. So the Aussie challenged the 70-cent area before slightly recovering. Support on Friday will be 69.92 with resistance at 70.84. So you can see that despite the run up that we saw in the dollar, I'm just not all that convinced. That's why you're seeing is like my support levels are rather restrained. You know what I mean? So you're not seeing me like, oh yeah, it's going to break down here. Support's all the way down here at 69.30. I mean, not saying we couldn't break it, but I'm just not buying this whole dollar thing. The whole dollar move is more about the euro sliding back because of the signaling from a Lagarde than it is from dollar buying. I mean, look how low the indices have broken. The dollar still can't get a decent bid. Yeah, it's moved higher, but if you look what the reaction we've seen in equities, people running out of it, the dollar should have already zapped up. It just hasn't. Well, looking at the Kiwi. So the Kiwi challenged 66.01. You can see the significance of this area, 66.01. on Thursday. Support on Friday will be 65.77. See, it isn't even checking out those lows with resistance at 66.65. You can see here, very tight range day. And then on to the CAD. You can see here, we made that run to 34 and then we give it up and see how we're stuck here. So once again, if this dollar really wanted to rally, and this is a nice rally, considering the moves that we saw, we should be seeing this dollar index taking off like bananas, and it just isn't. But this has been a nice move here in the dollar CAD. There's no doubt about that. But that's a bit disappointing to get up to 34 and then quickly come right back down the hill. So the dollar CAD pushed the 34-cent area before paring back 50 pips. Resistance will be 33.64 with support at 32.68. So you can see here, I don't even believe in it. I did this yesterday in the Asian session, and I'm like, wow, it went to 34. Do you think it's going to get up here to 34.50? I'm like, I think the highest probably resistance is going to come in 33.64. We haven't even taken out 33.50. So that's what I'm saying is I don't buy this. This dollar is just a bunch of junk. I mean, but there's a good reason because once again, it feels that we get that blue wave, going to be a lot of stimulus, and that'll put the pressure on the dollar. Looking at the peso, nice rebound that we saw in the peso though. Dollar peso will rally to 21.48 before paring back a bit. Support on Friday would be 21.22 with resistance at the 21.48. It looks like we went right there and we haven't been able to take it out. Still bearish. That market's going to have to move a lot before it'd have a bullish tone. Next one, JPY. Dollar yen came back after challenging 104. Resistance will be 478 with support at 422. Onto the cash dollar index. See, this dollar index should be, honestly, it should be like around here. And that's not even saying a lot. I mean, with the moves we've seen in FX, and we're just barely scooting higher. I mean, you can see there would be a trend here. You broke that, and we're just scooting higher. Not any real dramatic move. Dollar index extended Wednesday's gains on Thursday. Resistance will be 94.29 with support at 93.37. Heck, that might have even been ambitious. Let's go and move into the cross rates. So we had 69.54. We did take a drop here. You see, as the equities fell. So this is reflecting that move in equities. So for support, let's take a look. Right here, these lows, there should be some demand there, which, okay, that's 68.92, and we did get just a little bit below that. So 68.92. And resistance, I don't think it'll make it all the way back here. And but the undertone, the underbelly right there, and also its confluence with that wick. Let's go right there, which is 69.37 for resistance. And then Euro Pound. This is stuck. So no changes here. 90.06, 90.75. 90.75 almost seems a bit ambitious. We do have this 90.56, but the only difference right there, we'll leave it there. It's not going anywhere. Let's go into the Euro odd. Oh, okay. I think what's his name? DK was saying it looks like he was mentioning about the 94.50. Exactly. Yep. He was saying he should have been a lot higher. Yeah, that's what I'm saying. But I think the reason the dollar has a bit of an undertone, and we're talking about this since Wednesday, is because the thought that the equities will fade, that will provide an undertone bid. It's not extended to Mars, but it'll keep it from falling apart. And then of course with the ECB, the euro should have taken a bigger hit realistically. But once again, the thought is that if Biden's going to win, the dollar's going to be on the offer. So it's going to limit the amount that the euro can go and fall. So anyway, looking at the euro odd, you can see here we're just stuck in the middle here. And it's Friday, so I don't expect them to move very much in here. I mean, you know how the euro's kind of stuck. Uh, Once again, I think the euro could have really taken a hit, but I think the reason it's not is because once again, if we do get, it's going to sound like a broken record, but if we do get that blue wave, and it certainly looks like it's going that direction, the dollar's really going to come under pressure because, as I mentioned yesterday, the thought is if they get the blue wave, Biden and Pelosi are going to go for an FDR type New Deal. I didn't even know it. I was joking about it moving higher. I heard that they're looking at between 3 trillion and can go to 7 trillion. I mean, like that's a real FDR New Deal. So you can see that type of situation why you will see the dollar come under pressure. Uh, we did put the 65.81 from yesterday. See how they held it here. Um, The only thing, and this is just from what would the risk be? 65.42. I don't think it's going to get down there, but that would be the risk. 65.42 on the euro odd. So if you were saying I'm buying it, that would be your risk there. Don't really think it's going to get down there, but it's not like way down there, but that would be your risk. And then on the upside, 66.71. And that, once again, is probably a little bit generous, but that's what we'd be looking at. And then going to the Euro Kiwi. We had 76.11 and 76.89. The 76.89 is still good, but you can see how tight the trade is. I think people are hunkering down to a certain extent ahead of the election. Not that this is directly impacted by that, but you can see here the ranges are getting tighter and people just don't want to be exposed. What's the risk level? It's right there, 75.64. And let's go to ASEAN. Now this has stayed weaker here, and you can see here that the support was 73.30. We got to as low as 73.11. Same thing here, but it's reflecting more about what's happening in equities. That would be the risk right there. 73.08, which just about got there, 73.11. And you can see how these move just from level to level. And on the upside, this level here. That's not new, 73.81. Onto the guppy. Tad bit weaker here. Support, let's see if we can find some touches. See this body there? That confluence is right here, almost with this area right there. Let's move this a little bit lower. See this wick? That comes in along the lines of here. Still nothing good that you can hang your hat on, but it would be right there. That's the most touches at 34.13. So let's set for support. And the upside, we're just going to go with the level, 35.26. And lastly, sterling odd. This is interesting because we rallied all the way up here. We broke them. We rallied back. We actually made a pretty good run to this level here. Look at that. And we dipped back. Support's going to be this high bar right there, which is, well, that was the low so far, 83.23. Upside right there, that level, 84.03. And that's where we stand. And I don't know, like I said, you look at the indices, all the I would think, but you never know. I was going to say all the selling's been done, but I guess it could be a little bit more. To me, I think if you had to sell, you've already sold. I think we're kind of coming off of these lows. I'm not sure what they're going to go in and do today. But obviously the safer bet is just to play to sell rallies until this momentum changes. But we'll leave it at that. Thanks for joining us here on the European Crossover webinar, and we'll see you in the chat room.